And in today's Business Matters, federal regulators are addressing safety concerns at Washington Reagan National Airport after last week's deadly crash. The Federal Aviation Administration plans to reduce the number of arrivals, and this is based on an email seen by Reuters. The FAA told airlines the maximum number of arrivals will be cut by 2 to 26 per hour. It said this would reduce risk and create a little space for extra coordination, but it warned this would increase average delays from 40 minutes to 50 minutes. The plan comes after a military helicopter and American Airlines jet crashed mid-air, killing 67 people. Breaking up can be profitable, and that's what Honeywell is banking on, with plans to break into 3 independent companies. The company announced today it will separate its aerospace and automation businesses, and it's moving forward with plans to spin off its advanced materials division. Honeywell is based in Charlotte, North Carolina. It's one of America's last big industrial conglomerates. The move follows a similar breakup by GE. GE's market value is nearly 4 times larger as standalone companies than when it was one company back in 2022. Google is the latest major corporation to scale back its DEI initiatives. In an email to employees yesterday, Google said it will eliminate hiring goals that are tied to ensuring diversity within the company. Changes to other programs and initiatives are being evaluated. Google said its internal employee resource groups will remain. U.S. Treasury Secretary Scott Bessent has laid out the Trump administration's strategy to lower rates. Bessent told Fox Business that he and Trump are focused on the 10-year Treasury bond and not the Fed lowering short-term rates. Bessent said that Trump believes if the economy is deregulated, a tax bill is completed, and energy comes down, then rates will take care of themselves. Yields on 10-year Treasury notes are up even though the Fed cut short-term interest rates by a full percentage point since September that is. Since Trump's inauguration, through the 10-year yield has inched down. Cost of benchmark securities like the 10-year Treasury determines how much the government has to spend and what people and businesses pay to finance purchases and investments. Music by Bruno Mars, Adele, and Wiz Khalifa now has a new owner. Warner Music Group gained the rights to the songs by these artists and more. The company has acquired a controlling stake in Tempo Music. This helps expand its intellectual property portfolio. Warner Music Group partnered with investment firm Providence to launch Tempo in 2019. Tempo quickly amassed a diverse catalog. It holds music rights for leading songwriters, artists, and producers such as the Jonas Brothers and 21 Pilots' Tyler Joseph. More music to the years. Warner Music Group has closed another deal, this one with Spotify, for a new multi-year distribution deal for recording and publishing music. Spotify will have a direct license with WMG's music publishing arm, Warner Chappell Music. The company said the agreement will expand paid subscription tiers and introduce new content bundles. Spotify's CEO said the company would have personalized offerings, including a premium tier called Superfans of Music. And China filed a World Trade Organization complaint against Trump's new 10% tariffs on Chinese imports. Here's the details.
In the Wednesday filing, China argues that the tariff, as well as Trump's cancellation of a duty-free exemption for low-value packages, are protectionist and break WTO rules. Beijing's complaint also comes after Trump's move to shut a trade loophole that allowed small-value packages to be shipped duty-free. The so-called de minimis provision, used widely by e-commerce giants like Shein and Temu, exempted packages with goods worth less than $800 from duties. Around 1.36 billion shipments entered the United States using the de minimis provision in 2024. The Trump administration has blamed the de minimis exemption for allowing fentanyl and its precursor chemicals to enter the U.S. unscreened. Recent Reuters reporting has also found that drug traffickers are exploiting the exemption. Beijing's Wednesday WTO filing could lead to a ruling that Trump's duties violated trade rules, in the same manner that a 2020 ruling found that his first-term China tariffs broke trade regulations. However, such a victory would be unlikely to satisfy Beijing because the WTO's appeals body has been largely inoperable for years. That's because of Washington's blocking of appointments of appellate judges over what it views as judicial overreach by the body, which has prohibited a final decision in the 2020 case.
Now, it's worth noting that China itself has received a lot of criticism over market violations. In a report last year, the Office of the U.S. Trade Representatives called China the biggest challenge to the international trading system established by the WTO. It criticized Beijing for embracing a state-directed, non-market approach to the economy and trade, which runs counter to WTO principles. The report also said China targets industries for global market domination by its companies. It said China's non-market policies and practices cause serious harm to workers, businesses, and industries in the U.S. and worldwide. Next, first-time claims for unemployment benefits rose more than expected last week. According to the Department of Labor's new report, an estimated 219,000 initial filings were made for unemployment insurance for the week that ended February 1st. That's an increase from the week before. But the level remains relatively low. The U.S. labor market has cooled significantly this year, and the pullback in job growth has largely been attributed to employers reining in hiring rather than conducting mass layoffs. But that means it's taking longer for unemployed people to find work. Continuing claims filed by people who have received jobless benefits for at least a week or more have been hovering around 3-year highs. Now, heading into Super Bowl weekend, the NFL is crediting a drop in concussion cases to advances in helmet technology. Concussions fell to a record low this season. On top of changing kickoff rules, the league expanded the use of helmet coverings known as guardian caps. But convincing players to wear the top-rated helmets has been a challenge, especially since there are multiple options, including several that are approved but in the not recommended category. Some players have complained about how the guardian cap feels when playing. Meanwhile, the NFL Players Union is calling foul on expanding the season. The executive director of the NFL Players Association slammed the idea of adding an 18th game to the regular season. Lloyd Howell said that none of the players have any interest in expanding the schedule. NFL Commissioner Roger Goodell told reporters this week that advancements in safety and training could help pave the way for an 18-game season. Neither side has negotiated the idea. There have only been informal conversations. British businesses are preparing for potential tariff hits, with firms planning to adapt supply chains. Some seek to diversify their chain, others to expand their product offerings. This comes as the Bank of England lowers interest rates and predicts a poor economic outlook. NTD's international correspondent Malcolm Hudson has a story from London.
A survey of 1,500 British businesses found nearly 40% of firms are increasing their prices in response to the potential threat of American tariffs. Many firms are also planning to adapt their supply chains to weather the storm. The poll was conducted by banking giant HSBC in November as part of the bank's Going Global for Growth report. 41% of firms surveyed plan to diversify their supply chains. 31% are looking to bring their supply chain back in-house, while 41% said they would expand the products and services they sell to help offset any tariff hit. It comes as President Trump threatens tariffs against Canada, Mexico, China, and the European Union. With Britain, Trump suggested last Sunday a trade deal can be struck.
UK is out of line, but I think that one can be worked out.
A number of firms and manufacturers are bracing for a financial hit. Scotch whisky and Guinness maker Diageo cautioned earlier this week that Trump's proposed tariffs could deal a $200 million blow to their profits. The London-listed spirits giant also scrapped a key sales target because of growing uncertainty linked to the tariffs and volatile consumer demand. While firms are hiking prices and taking action ahead of tariff impacts, the HSBC survey showed only 15% said they would reduce their overseas trading activity. On Thursday, the Bank of England slashed short-term growth forecasts for the British economy. The central bank also cut interest rates by a 0.25 percentage point to 4.5%. This leaves British rates among the highest for advanced economies and just above the US Federal Reserve's range of 4.25% to 4.5%. Bank of England Governor Andrew Bailey said he expected to be able to cut interest rates further, but stressed that progress would be cautious.
We live in an uncertain world, and the road ahead will have bumps on it.
He cited both domestic and global uncertainty, incoming tax increases for employers in the UK, and Trump's tariffs. On tariffs, he said,
We're just not in a position to judge these effects at the moment because we don't know what the policies are. I mean, they do change from day to day.
British Chancellor Rachel Reeves said she is still not satisfied with the UK's growth rate and that the government will go faster to kickstart economic growth. Malcolm Hudson, NTD News, London.
Now, Quicksilver, Billabong, and Volcom are permanently closing all of their stores. More than 100 locations across the United States are shutting down in the coming weeks. This after their operator, Liberated Brands, filed for bankruptcy. Liberated Brands blames fast fashion rivals and other economic factors for its financial struggles. The good news, though, is the iconic surf and skate-inspired brands aren't disappearing altogether. Their parent company, Authentic Brands Group, is transitioning the licenses to another operator to keep making the clothes. And major brands are hoping to score points with their Super Bowl commercials this Sunday. The ad spots aren't cheap, but they can be winners for companies looking to reach more than 100 million viewers. NTD's Andrew Thomas has the story.
The Kansas City Chiefs look to defend their Super Bowl title against the Philadelphia Eagles this Sunday at New Orleans. For advertisers, a successful 30-second commercial during the game is the real championship.
It has been a banner year for the National Football League. Or should I call it the National Football League?
From the very beginning, football has been a conspiracy to make us hungry.
So how famous are you? Like Matt Damon famous?
Maybe Ben Affleck famous.
That's a shame.
Adweek Chief Content Officer Zoe Ruderman said celebrities still reign supreme.
We're seeing a big return of the combination of celebrities and humor. This is probably no surprise to anyone, but it's interesting that a lot of brands have doubled down in this. So not just one celebrity or two celebrities, but basically ensemble casts.
While $8 million for a 30-second ad isn't cheap, Ruderman says the exposure is worth it.
Listen, $8 million is a lot of money for a corporation, but there is no better moment to get your brand messaging or awareness out there. This is one of the few moments left where people tune in. It's appointment television viewing. The audience is huge and it's growing.
The spots on Fox, which will broadcast the game, sold out in November. But Ruderman explains how the investment is bigger than the 30-second spot itself.
What's really special about Super Bowl ads is it doesn't just end with the 30 seconds or the 60 seconds on television. People are talking about them. There's a lot of lead up, there are teasers, many of the ads are released weeks in advance, so you get a lot of this sort of organic chatter.
You're saying the pan I used to fry my bacon is made out of flying saucers?
We don't have time for a science lesson, Mr. Ramsey.
More than 120 million viewers are expected to watch the Super Bowl this Sunday. Andrew Thomas, NTD News.
Chinese e-commerce platforms like Temu, Shein, and AliExpress might soon face obstacles in running their businesses in Europe. The European Union has proposed new measures to curb the flow of cheap Chinese products flooding its markets. The move follows a similar action taken by the U.S. The European Commission released a statement yesterday calling on EU lawmaking bodies to accelerate a proposed customs reform. Here's what's at stake. Packages worth less than about $156 can currently enter the Union duty-free. And Chinese e-commerce platforms benefit the most from this policy. 90% of these shipments in 2024 came from China. Lawmakers have voiced concern that these dirt-cheap Chinese products could expose consumers to harmful chemicals as well as undermine local businesses. A proposal calling for cancellation of the duty-free rule has been on the table for 2 years. Now, officials are urging the EU Parliament to expedite the voting process. Earlier this week, President Trump also signed an executive order to revoke a rule allowing cheap Chinese goods to enter the U.S. duty-free. The U.S. versus China, who is winning? China experts say China might be. if the U.S. doesn't play hardball. Here's the story.
Removing China from the international trade system is in all of our long-term interests.
China experts Thursday saying that America will eventually depend on China if it becomes the world's #1 superpower. Beijing will be able to shape American society and politics. Expert Emily de la Bruyere says a big problem is that the two countries are playing different games.
Beijing isn't competing to be a first mover in developing the best, newest technology. Beijing is competing to control markets and resources. The U.S. can pour billions of dollars into developing the best new chip design technology. But what use of that is that if those chips can only be made with Chinese products?
De la Bruyere says hampering China's technology can't be America's core strategy, explaining that China will eventually develop anyway because the world is globalized. She says the U.S. should invest in domestic production. The government should help, but in specific ways.
We've targeted mid and downstream spaces and value chains that depend on China for their inputs and as well as for their markets, and therefore we're just bolstering a player that's within a Chinese-controlled value chain. I think that changes if you're investing in the upstream.
De la Bruyere even suggests cutting China off from global trade with the U.S. and its allies, admitting it would cause major short-term pain, but would be better for the world long-term.
The Commerce Department released trade details stating the U.S. imported a total of $505 billion worth of goods from Mexico last year. That was a $30 billion increase from 2023 and a new record. Mexico is the top exporter of goods to the U.S., followed by China and Canada. The new data comes after Mexico and the U.S. reached an agreement to delay a 25% tariff on Mexican goods for a month. And meanwhile, New Jersey Congressman Jefferson Van Drew is worried that New Jersey Turnpike Easy Pass data could go to the CCP. A contract was recently awarded to a company owned by a Singaporean government-linked entity, an entity he says has close ties to the CCP. NTD Sean Marshall has more.
New Jersey Congressman Jefferson Van Drew sent a letter to the New Jersey Turnpike Authority Board of Commissioners, urging them to reconsider their recent decision to award a $1.73 billion Easy Pass services contract to TransCore, a company who he says has ties to the Chinese Communist Party. Congressman Van Drew's press release says it is completely unacceptable that data about U.S. traffic, driving habits, and travel patterns could make its way to the CCP, and also subscriber data such as home addresses, credit card numbers, drivers' license information, and license plate numbers. TransCore is a Nashville-based company owned by ST Engineering, a Singaporean government-linked entity. ST Engineering is owned by Temasek Holdings, which is owned by the Singaporean government and has significant business ties to China. Former U.S. Senator Robert Torricelli told Fox Business, "I would rather the Chinese knew what I was watching on TikTok rather than have the Chinese monitoring my car going up and down the New Jersey Turnpike. I don't really understand why people aren't more upset about it." There's also worry about past links to the CCP. A high-ranking member of the CCP and former chairman of China National Offshore Oil Corporation, CNOOC, as well as Sinopec, sat on the board of Temasek Holdings until recently. Sinopec and CNOOC are state-owned Chinese oil giants with close ties to the Chinese regime. The same former board member served on the Chinese People's Political Consultative Conference, a part of China's United Front system which carries out international influence operations. Congressman Van Drew stated, "By handing over critical infrastructure operations to a company tied to China is reckless and unnecessary when American-based companies are fully capable of handling these services. The New Jersey Turnpike Authority must reconsider this contract immediately and put American interests first." NTD reached out to TransCore and ST Engineering for a statement but did not receive one before this broadcast. Sean Marshall, NTD News.
LG is recalling 500,000 electric ranges involved in more than 24 house fires. But customers who comply aren't getting refunds or exchanges, they're getting warning stickers. The Consumer Product Safety Commission says it received nearly 90 reports of people and pets accidentally turning on the front knobs. Several incidents caused more than $340,000 in property damage in total. 3 of the fires resulted in pet deaths. Customers who respond on LG's website will get a warning label. It reminds them to push a lock button when the range isn't in use. The ranges were sold at Best Buy, Costco, and Home Depot between 2015 and 2025. The recall covers about 24 models. Starbucks baristas are once again scribbling on customers' cups using Sharpies for the first time since the pandemic. Starbucks' new CEO has instructed employees to include simple, personalized messages on cups, such as affirmations and well wishes. However, some Starbucks baristas are already pushing back. They complain that writing out names and messages on every cup has slowed down their pace, and say customers have also misinterpreted the messages as attempts at flirting. The response is one example of the challenge the company faces, which is implementing its new strategy to revive the struggling chain and bring back the coffee house vibe. Okay, down on Wall Street, S&P 500 and Nasdaq ended higher, and while the Dow closed lower after a choppy trading session today. And this comes as investors sifted through earnings reports, while also awaiting Amazon's results after the bell, and also awaiting a key jobs report that is due tomorrow. So most of the 11 S&P 500 sectors traded higher, with financial services and consumer staples leading gains, and of course energy stocks losing the most ground. Markets saw a dismal start to the week, if you remember, when U.S. President Donald Trump announced sweeping trade tariffs over the previous weekend, but suspended the levies on goods from Mexico and Canada on Monday for a month. All right, that's all today on Business Matters.